Let's take another look here at today's short trading day and some of the key catalysts investors have been watching and observing for this year and what that might mean for next year. For that, Jonathan Corpina is joining us. He's a senior managing partner at Meridian Equity Partners. Jonathan, thank you for staying with us 12 minutes after the markets close on Christmas Eve. Let me get your take. I think one of the most important themes, though, Jonathan, that we should really talk about, both stocks and bonds worked risk on and risk off, worked in 2019. What do you make of that?
Yeah, kind of a unique market that we saw this year, right? Things that normally trade in a nice correlation between them shifted this year. A lot of different factors affected our tape. The percentage returns that we saw across the board this year is something that's quite unique. Does this translate to next year? Not sure yet. There's still a lot of headwinds that's out there. But clearly, I think if you strip everything down and look at the basics and the fundamentals, investor sentiment is there, economic sentiment is there, our economic data is doing well. I think people feel that we're in the right position, we're moving in the right position, and things in the future continue to look bright. So that's a positive feeling and sentiment that we've had on this market that's helped us get up to these levels. And
it's amazing because at the same time, some of the most recent economic data out of the United States has been disappointing.
Yeah, and there's been a quite a shift, right? I mean, we're getting good economic data as far as jobs and hours and earnings are concerned. Housing numbers were bad, started getting a little bit better. GDP, these numbers shift back and forth, which forced investors to get a little confused as to, is this moving in the right direction or not? But then you continue to watch the market trend higher and higher, and they're forced to putting in their money from off the sidelines to get in. The returns that we have seen this year, we should be getting some sort of pullback in this market. I mean, we can't continue to go higher and higher. But at the end of the day, if we get a 2%, 3% pullback for any reason or any cause, you're still way ahead of where you were a year ago.
And Jonathan, what are you thinking about as it relates to the themes for 2020? What's getting chatted about in terms of expectations? Not from a market return perspective, but all the geopolitics, macro events.
Yeah. Yeah, I mean, listen, there's the headlines that we've been talking about all of 2019, we're going to continue to talk about in 2020. And the headlines that we thought were going to be negative and put a little, a wall in front of this market has done quite the opposite. So we're going to continue to talk about these things. U.S.-China relations, that's moving in the right direction very slowly. We're in phase one. We're almost done phase one day in and out. We'll see how that continues and what happens there. Got a little bit of a surprise headline yesterday for that, which helped our markets. We're going to continue to look at Brexit. We're going to continue to focus on the Fed and interest rates, what happens there. Fast forward November 2020 election. That's going to shift the tone of our market as we get closer and closer to that. North Korea headlines always pops up every 2 months or so, and that's something that can certainly put pressure on our market. So a lot's in front of us, but those 5 things that I just named were the same 5 things that we were worried and focused on in 2019. So maybe at this point, the market might start to run out a little bit of steam when faced with these headlines.
I wonder, though, Jonathan, with respect to those themes that we've been talking about for 2019 that will continue into 2020, the one that will likely get more attention, I would think, would be the U.S. presidential elections. And, we're watching this race in the Democratic Party in terms of who's leading. And it is Biden right now. It's so interesting that we've seen a real pullback with some of the others right now. But Biden's leading. That's going to change the narrative in terms of what the U.S. Presidential election could look like.
Yeah, so look, we go back to 2016. We think we had it all. We thought we had it all figured out, right? We had, President Obama was coming out. Hillary Clinton would have been the natural transition to that. The economy was doing well. The economy was moving in the right direction. Market was moving in the right direction. Everybody was predicting she was going to win, and if she wins, the market's going to go up, and if Trump wins, the market's going to go down. Quite the opposite happened. So I think we learned a pretty good lesson there about polls and expectations on the market. From the Democratic side, yes, Biden is leading the way at this point. That can shift at any point. I mean, any headline that comes out there, and it's going to get quite fierce at some point soon, that can change the tone there. But I think what you're seeing now is, as much as there is criticism about President Trump, if you look at the markets, if you look at the numbers, he stands behind them. The numbers do speak for themselves. It's going to be difficult for a Democrat to come in and try to convince the American people that that person can do better on our economy and can do better on our markets, because at this point, we're at the high. In 2000, when President Obama came back into office, we were at the lows, got right through the financial crisis at that point. So he came in with such a great story of hope, and that did did translate. It's going to be hard to really convince people that our economy can get much, much stronger in a short period of time.
Jonathan, it's interesting as well when you take a look at the sector performance and what's worked. Risk on worked and risk off worked from a sector perspective. And I think the question is, are those going to be the dominant themes once again for 2020? Or is there going to be a reversion to the mean? And the reason why I'm asking you that is because I think you do like financials, and yet financials, time and time again, have continued to be, even in the Canadian market as well, a relative underperformer.
They have been, and that's why I think, with the market trading the way it is and with the sentiment the way it is, that, an underperformer like the financials is a good area to look at and to focus on. Clearly a lot of factors that are out there, but I kind of like looking at the horses that are a little bit behind the race to play catch up in this market. The risk on trade, look, if you did not play the risk on trade, you've missed out. And when we were up 10, 15, 20, 25%, you still saw some risk on trades coming in. So I think that risk on trade is going to continue until it doesn't work. And like I said before, we're up, close to 30% on the year. If you get a 4%, 5% pullback for any reason, not because the economy's broken, it's just naturally, the market's going to move up and down, you're way ahead of the game with a 5% pullback. So I think people are going to continue to move money into this market. But at some point, there is going to be a little bit of a tweak. There is going to be a little bit of a break where you are going to see a pullback.
Jonathan, what do you think at this point right now is going to be your best idea for 2020?
Look, I talk to people, whether it's through business and whether it's personal, and they talk to me about where the market's trading and the levels that it's trading at and the sentiment that's there. I think your best place is to be in this market. That money that's been on the sidelines has to come into this market at some point. It didn't. That we saw that slowdown there. It's going to continue into the beginning of the year. The sentiment is going to be there. The IPO market is going to come back. That calendar and that syndicate calendar is going to get strong in the first 2 quarters there. This market has all the muscle behind it to continue to move higher. So I think that risk on trade is clearly where I think people should be.
Okay, Jonathan, we'll leave it there. Great to see you. Thank you for being with us throughout the year and years, and happy holidays.